This is Bob Jenkins with Lipper. Welcome to another installment of our Meet the Manager video interview series. Today I'm joined by Scott Page from Eaton Vance. Scott is the director of the floating rate group here at Eaton Vance. He is also manager of 3 of their funds. Scott, thank you for joining us today.
Thanks for having me.
Well, Scott, it seems like your group has had quite a run of success with Lipper Fund Awards of late. You picked up a couple this year. You've had 4 over the past 4 and 11 since 2003. So first of all, congratulations. Second of all, what is it that you and your team have been doing to create such consistently strong risk-adjusted performance?
I think our performance arises mainly due to people and process. We have a large team at Eaton Vance, 25 professionals, and we have honed our process over 20 years and constantly improving it. And it's a systematic process. We are systematic credit analysts. We're not really credit artists. Yes, intuition plays a role, but what we like to do is bring the qualitative aspects of credit analysis and make it more quantitative. And that allows us to have a more consistent comparison of risks, and it allows us, I think, to deliver better performance and more consistent performance.
And you've had quite a bit of experience in this space, I see, dating back to 1989, as it were. Now, across all those market cycles, how has all that experience impacted the way you approach investing and your philosophy?
Well, that's a great question. We have seen a lot over the last 25 years. We started in 1989, well, not quite 25 years, but we've seen good times and we've seen tough times and high interest rates and low interest rates, really everything. And the one thing that I think has been most important is really just staying true to credit. You know, I was trained as a commercial banking officer, and it was all about getting the money back and not making bad loans. It's really hard to turn bad loans into good investments. And I think if we just stick to our principles of getting the money back, that will see us through almost any environment.
And along those lines, why should an investor choose Eaton Vance floating rate products, and what differentiates you from your peers?
I really think it's mostly about our approach to the asset class, our philosophy. We think most people are using this asset class to bring stability to their portfolios, to more volatile equities, to help dampen that. We think the inner beauty of bank loans is brought out by seeking stability and attempting to bring that to the portfolio rather than reaching for yield.
Terrific, and you know, those are some great insights and what I think is a very important product category given the market environment we're in right now. So I want to thank you again today, Scott, for joining us and sharing your thoughts. And thank you again for joining us as well. We look forward to having you participate in another one of our Lipper Meet the Manager video interviews.